Okay, good morning, good morning. Let's start real quick. Get this done with. Let's start off with the yearly. I think we showed this on Friday, the yearly of what it was doing. We're going into earnings season right now, and it's still projecting a upward movement, especially after we held half back over here. Continue to go up. You know, as the yearly, we do not trade the yearly because we're not swing traders. But as we look at it, it did a dip buy into the 17th, which comes down to be Wednesday, I believe. Yes, Wednesday. So we set the low on halfway of the week right here, Wednesday. Tuesday, Monday, we had a doji, so we know we were going to pull back into halfback. But this is the halfback of that. This is the halfback of the Fed day. Actually, down here, this is the Fed day halfback right here, when they announced that they were going to stop interest rates and look to cut next year, and how many they were going to cut. So we're just pulling back to areas that they're going to buy. As you see, went up, came back down, boom, halfback, came back up, but we were failing to break out. So our range is literally on a daily, like if you were a daily trader, which we aren't, it was right there. Couldn't hold above, boom. Right here, you start holding the high of that candle, boom, made a new high. So what we do, we did a low, high, halfback, boom, new high. So the setup does work even on a bigger time frame, but we do not trade the bigger time frame as we are day traders. Okay, so let's see what it did on this week, which is right here, I believe. Yeah, it's right here. This is the week that we are in right here. So let's go into a 30-minute. Actually, let's do an hour. The hour, right? Let's start off with our Monday. Our Monday, we were here, right? We had our low. Do 2 hours. The bigger the time frame you do, the better you see the pictures, and don't take into account the wicks. 10 days right here. Okay, here we go. Remember, they created that gap, they came down, they closed the gap, they went right to halfback, which held up. If not, we would have gotten to see Monday low from 2 weeks ago. So this is the Monday. Let's take this high, take these lows, and there we have it. So here, going into Thursday, close, look, that powerful candle above, making it look very, very bullish. Now, this is earnings. We're going into the big earnings next week, Tuesday and Wednesday. We got 3 of the big companies reporting, so I'm assuming they're boosting price up. As you know, those have swings of 5 to 7%, so we could just continue to move up into those earnings, and then they could just drop it right back down. They do have a safe place here to go to, so they will possibly go down there. They also have the 2 p.m. halfback that wasn't hit on Friday, so it's a possibility we go there. So let's set it up. Let's see. Look, this is the weekly. We did high, low, above halfback, and took off until Friday. So they were looking to make a new high. As you see, it hit the 200% all the way to the highs. Now, this is a different setup because we don't trade this because we're day traders. This is just a roadmap to see where the market is going, how it ends, and where they have it. They have it exactly at the highs on a 2 hour. It's literally dictating a higher time frame, but you're in this time frame, you're risking more money. As you go to a lower time frame, you're risking less, and you're getting out at a target or at a exit for a reason. Here, you have all this movement up, but this is going into Wednesday, I guess right here, from Thursday to Friday. You got to hold through all this, no matter how much it pulls back. But your risk will be underneath halfback, I guess, if you're going long on this. Or to this high and then take profit here and here. These will be your profit zones. You know, like this will be your first profit. This will be your second profit. And then up here in this box, that's definitely get out. That's the same concept that I talk about on the 30-minute or on the box setup with the time frames. We are exiting in this time frame, in here, in this price zone. We want to get out. But all right, let's go down to a lower time frame and then we'll take it from there. Let's see. So this was the projected look for it, and as you see, if we go back to this, let's go back to let's go to a 30-minute, and we'll see. This is the Fed day right here. I was mistaking it with this or down here. This was the bonds, and that was the Fed day. Now, when this dropped down, it doesn't necessarily mean that they didn't like the news. It means that they took profit and went into bonds. So they started changing their precision in this market to put it into bonds. That's usually what they do. At the highs, they're going to take profit. They got to put their money somewhere, and they put their money in bonds. Realistically, okay, so let's look at this. This is the Fed day. This is that 2 p.m. candle when they announced it. As you see, we went all the way down, almost swept the low of it, came back up, held up here, could not break out, could not break out, could not break out, came right back down to it. Now look what they're doing to it. Now you got to take into account that interest rates are hurting companies, and companies are pulling out. I think J.P. Morgan said that they weren't going to be allowing Apple and all those companies to actually have a line of credit so they could allow people to purchase their phones and finance through Apple and all that. They were actually pulling back from all that. All the banks, when they reported earlier this week, said the same thing, that they were trying to cut back on costs because their earnings came in really, really bad. So for them to lend out money for these big companies like Apple or Samsung or these other companies with interest rates being so high, and then those companies actually making money off their money, they're not making any money off that. So they said they were going to pull back from that. It's going to affect Apple. It's going to affect other companies as well. But it's yet to show. So as for now, they're going into earnings displaying this. I see failed to break out, failed to break out, failed to break out, boom, came back down. Now we did have the same setup here. When it dropped, it failed to go above the highs on a 2 p.m. This 2 p.m., this 2 p.m., this 2 p.m. And then this was all the way right down 2 p.m. They just kept selling the 2 p.m. Here, they kept buying to go to the high of 2 p.m. Here, it kept going to the lows of 2 p.m. Here, it's breaking out from that 2 p.m. candle. As here, it was hitting and pulling back, hitting and pulling back. Here, it was just going right through the 2 p.m. at first. And then it started holding it here as it started turning. Here, the same concept. We did not get, see, in this run-up, we did not get the buys at the lows of the 2 p.m. here. So there is no turn. This is just being bought into earnings. So this could be a fake breakout into the first reportings, which will be 3 days of, actually 3 companies on Tuesday and Wednesday that'll be reporting, and there's 8 companies that are holding up the market. So whatever they project or whatever comes out is really going to affect the market a lot. But they have little safe spots to go to, which we'll keep an eye on. But as for now, they ran it up. Let's start off with our Monday. Let's drop it down even lower. We really don't need this right now. Let's just put it back there. Let's start with our key plays for Monday here. And I always tell you, just set up the... Actually, here you'll see that they did try to hold the 2 p.m. here, right here, low. They held it right here. And I'll show you that. They're very sneaky with it. But we're going to do it as Monday was a holiday too. So this was the Friday, 2 p.m. and Monday was a holiday, so we didn't have a 2 p.m. candle on on Monday, but Tuesday went right back up to 2 p.m. and then rejected right here, and then we sold underneath. But it ended kind of flat on Monday as well. I mean on Tuesday as well. Wasn't very interested in it because of the holiday, and most people are like that. It's not really that interesting on a holiday. But let's see what it did here. Because remember, it's coming off of a rejection, and we're still underneath that low. So you got to think, what are we doing? We're making lower lows. Price is not holding. Right here, same concept. Boom. And I think on this day, we gap between Asia and London. Right here. Yeah, Asia and London gap down. And then here, see how they came back up and they held that low. And then it just took off. It really didn't have much on it. But remember that we also had this concept right here. That they kept holding that gap. See? They kept holding the gap. And then it came down to what? To this halfback. So obviously, I mean, going into closing out a gap and then going to this halfback and then going into earnings season, they literally took advantage of that, because, theoretically you're thinking hit once, hit twice, boom, we went through, now it's selling off, everybody's trying to sell into this. Hey, the market's coming down. What are they going to do? They're going to flip it around. These gaps are to buy time. There's just huge orders here. They're just big orders here to hold the market up. This will be how the market's supposed to flow. So the market was supposed to come down here. So what they did was that it was supposed to come back up, and they took advantage of the whole move up, and then they changed the direction of it. Remember, it's supposed to come down here. That's why it couldn't go past these highs like this. Once it went down here, they took advantage and poof, they bought into it. And then it looks, like I said, we started holding that 200. They started holding this 200 down here. And look, it went straight to that price, which is, it's kind of odd to see that. Look how it literally holds that price. Like once it hit there, look how it takes off. Once it hit here, look, boom. We went to the other side of this thing instantly. Like that day was instantly moved to the other side. So we had this big move, boom, right to it. Look at it. And that's at the close. So, I mean, if these little wicks appear at the same prices as this setup, I mean, this is literally off by 3 points, but I mean, I'm not buying there. You got to buy over here somewhere to confirm it. Once we came down, came back up, and took off like that. Yeah. Anyway, let's go to the next move. I guess they did do the turn, but into earnings, they did it a lot faster. Let's see what they did into the next day. As you see, this is the problem here. This is where it all developed. Not the problem, but this is how it developed to go to the other side as well. So right here, and then we got to move back up right there. And all this did was pull up to the highs, right? We set up for New York, and it came right down to London, to London's halfback. But look where it came down to as well. And then it just took off, boom. So next day, which is now going into Friday, they did the same thing right here. So not the same. Well, yeah, they kind of did the same thing. They held London, but it was very bullish at the highs. Yep, right there. So very bullish move up. They're just buying it into. They just keep buying into it. And there's retail buyers I mean, boom, right there. Look at that. Now, if you did the setup for 8 o'clock, you saw that they were selling it off, and then possibly once it held London, I thought it was going to close under London, and we were going to go see the downside, which would have put us at halfback of London. It didn't do that. Like I said, if you waited for New York close, right, boom, right here, when it got above here and it started doing this, it just started grinding up into Blair bar. I mean that speech at 1, it just took off and it literally broke out from this high. It also at this time, when I put those fibs back on here, it was breaking out, finally breaking out, which I was talking about. Boom. See, look. So everything here was indicating that at times when it couldn't break out, the whole scenario was looking like a breakout. Right here was looking like a breakout. And the previous day when it pulled back to the high this. Right here, boom. Look where it pulled back to, right here. So we didn't even go this low. So they were just buying it ahead of time. So just using the fibs from the 2 p.m. is good, but to see where each market is at, each time frame is at, is also crucial. And to see the overall picture, to see how it moves. Like I said, Monday was a holiday, so this really didn't matter. It was a sell here, but then look, they closed the gap and it got bought here, right here, boom, bought into Wednesday. And then it just got moved up, like strong move into then. Like I said, there's earnings coming. This is an all-time high, too, which price on this doesn't matter. We moved up from the lows. We are now like close to 20% move up. So I think, the price of this absolutely doesn't matter. This doesn't matter at all. 18%, we're near 18% right now of move from the bottom, which we haven't. This doesn't even look normal, but it doesn't matter. None of that matters, because this price could get reset so many times so easily. Once they do a 6-month contract in March, we could be all the way down here again, and it'll just be in the past. They do whatever to hold up the market, and it's something that you can't really do anything about it. It's just, this doesn't reflect true price at all. I don't think anything does, especially with them doing this. The funny part is that they had a report that came out that said that the Feds are cutting back extremely, and this is an extreme cutback. So I don't know how this is going to affect the market completely at all. But times that they have dropped it like this, whenever they drop price like this, and this is literally, let's go back a couple years. Hold on. And this is near lows, and there's something going on. I mean, prices at the highs, the Feds are dropping all the liquidity in the market. It's all up to earnings, and if earnings are bad, I don't think the Feds could put money in the market into earnings, or else price will be outrage. Price will be at 55. Price would just take off like this if they put money in there, because they know that retail, and that's why I said on Friday, I said retail is probably buying into this, because the concept for so many years is to buy into earnings. So literally buy the rumor, sell the fact. You're buying into it because they're reporting, anticipating, or just buying because people are selling. They're in a sell position, and the market is constantly gonna try to squeeze them up, which creates those big swings into the earnings. So I think that retail is just buying into them. The Feds are stepping back from it. If earnings is bad, I think we have a huge swing to the downside, and literally that's when the Feds will get involved. They know their levels where they want to put money in. I think anywhere near this price down here, anywhere at this price, they're going to put money into the market. Anytime it's gone below that low right there, this is them putting money into the market. Dip below, this is the last earnings when they reported right here. This is Meta and Microsoft reporting, and it came down. This was Apple and the rest of them reporting, and it came down. So right now we're at the same scenario. We're probably going to see them report. We're going to probably get a drop down here. Once it gets down here, I think the Feds will invest in here. I think the Feds will get involved in here if it drops down here. This is an area that they don't want it. This is the 200 moving. This is the 200 SMA. And every time it comes down, they put money in it. Every time they come down, they put money in it. You could literally see the correlation between both of the charts of when the Feds put money in it and when this occurs. Now, this was only a 10% drop from the highs, right? 11% drop, and they got involved in it. So let's say they push this up to 49 and it drops down here. Oh man, I can't see it here. 49. This is a 11% drop. So understand that every time this thing drops 11%, the Feds are getting involved to put money in it. Now let's look at the other times they did this. Let's see. This is, yeah, it's 17% drop right here. And this was, what year was this? 1017. So this was this was probably the Ukraine war or something like that. This is the 17% drop, and you better believe they look all the money they put in. But they were also taking out money at this time as well. So let's go back a little bit more. Yeah, this is a drop from the original highs. This is them liquidating money. This is them putting money in it. This drop right here, I think, was the Ukraine drop, the war in Ukraine, and they literally put in a lot of money there during that phase. Which it displays in all these little pop-ups here that they're putting money in it. So right now we're at the lows. I think they're waiting for earnings to come out to see how they display. But when earnings display, they know the price that they want it. They'll start putting money in here if we drop that much. This is literally an 11% drop. So will it happen overnight? No. That'd be like kind of a concept of the scenario that it constantly does this. Earnings comes up, they boost it up, they sell it. Same thing they did here. This is the drop. This is the drop here. See? We went up, right? Boom, dropped down. Right before earnings. Here, there was a gap. There was a gap here somewhere. I remember it. They closed the gap, right? And then they started up. This is earnings. One day. Then the next week or whatever, they started reporting more. It was bad. Boom. Fed started getting involved in this area. Pop back up. Bad earnings. Boom. Feds got severely involved, and then the line went like this. Boom, like that. Why? Because it dropped 11%, and then they boosted it up. Once they boosted up, who's going to go against the Feds? Nobody's going to go against the Feds. It's easier to go with the move than without the move, right? Now, people are so blinded with their 401ks and all that stuff that they don't know any better. The thing is that they don't want people to start pulling out their 7%. Their, oh, you're going to be rich at 30, 40 years if you're still alive. So, put 10% in the market. I think now they increase the caps that you could catch up and put more money in the market for your 401ks or your Roth accounts. Like they advertise it so much that it's too late to do that. Understand that those concepts of Investing money for long-term investment is only for them to make money on it at this period of time. The fact is that you take the population, you multiply times the amount that they're investing. These bankers and these hedge funds are making money. The market makers and the rich people are making money off of this, because every time we stay at the highs and you're investing, right? Like, look how long we stay at these highs and look how fast it drops. This is fast money. This is us right here putting in money in our 401ks. It's lasting forever. Look how it drops. So duration of time up here, and the time that you invested in here, this is daily. So if you have a daily price and your average is up here and they're selling into it, they're making a crazy amount of money. Now you could think of how that looks on your P&L when you're taking a bad trade and it's going against you. How much money it goes against you when you're wrong. That's the same concept. They're just holding on to price up here, and this thing is dropping. That's how much money they're making instantly. Now you got to think of the population of people investing in the 401ks and all that, and as it drops, they're making that money. Because duration of time at these highs, the drop is instantly. This is a lot of money to be made. This is a lot of money to be made down here. The moves up, this is just the Fed's putting money in there, which is literally our money, into the market. And then, so they're investing our taxpayer money in here, right? And at the same time, you're investing your 401k in here. So they're double dipping right here. Anyway, set up for next week. We have a breakout. Like I said, we still have earnings. We still have areas to go to. If we start seeing it come back into this range, we know that it's gonna break down from there. Right now it's just boosting up. We hit our high here. Let's look at our closing prices here to see where we're gonna head. We got a high, low, and we have a gap too, right there, and we have our gap, which could possibly hold. So we could possibly be seeing a hold into I don't like doing it on this chart. Actually I had it on the other one, but we could possibly be seeing a hold into, I'll get rid of that other one. I don't really like having it on this. Like I said, I only use this chart to reflect just that range. I use MES for trading, and I use this for the overall big picture. So right there. So we have a huge gap, but it'll be interesting what it does. Like I said, earnings is here. They're probably just going to keep it at the highs. We do have that gap. It could bounce, keep going up off that gap. Go back to the other one. As you see, it went into the gap and they kept buying it. So can they hold it into Tuesday? Yeah, we could just literally be here and possibly go see this high. Did I even set this up? Nope. This is just our breakout candles right here. That's our breakout range. But we do have our range right here. And it's probably gonna match up the same as the breakout price. Now I do it on that just to see if they're gonna have continuation or they're gonna be neutral waiting for something. But look, even that candle's a lot higher than that. So as of now, that's what we have right now. It's a tight range. So that's only 30 points from high to low. So it's gonna have an explosive move, or we're gonna stay in this little range for all day. We could go to the top side and come back down to the downside. This gap is going to be a factor to holding price out, or it could just keep on breaking out, but it's going to have a move in the coming days, whether this is the top or it's going to continue to squeeze higher. As now we're at all-time highs, it could continue to move up into the earnings. All right, guys, have a good weekend.